Welcome, ladies and gentlemen, to Commodity TV and the new edition of our online interview series. Uranium is hot, and we want to talk to one of the hottest companies here in the sector, Consolidated Uranium. And Phil Williams, the CEO, is here with us. Good morning to Canada. How are you, Phil?
Good morning, Jochen. I'm well. How are you doing?
Perfect. Thanks. All fine. I feel extremely well when I look at uranium because my feeling is we are very close to a nice breakout. So before we talk about your fantastic company, I know that you have been on a nuclear conference the last days. So can you tell us some insights?
No, for sure. And you're absolutely right. It is very bright times for the sector. I just got back from London where they were having the annual World Nuclear Association Symposium. And it's really the first time after summer that the utilities and the producers and the various players within the nuclear space get together to talk about the prospects for nuclear power. And I can tell you, it's never been more positive. And some of the news that was coming out of it and some of the discussions certainly are very, very supportive of the future for nuclear power. And then by extension, of course, the demand for uranium.
Okay, super. Sounds like they are drilling already for uranium in your office, but that's great.
Yeah, we can. For that.
No problem. You can never hold it when you have construction somewhere. Okay, so that means the outlook for uranium is very positive. I mean, we saw already supply demand is something, which is getting certainly more and more into an imbalance. That's my observation. And also, I have the feeling that the spot market is getting really empty.
Yeah, and there's a few things there. I mean, the first off, and when the symposium started, the keynote speaker came out and really hit it from a big picture. And he said, look, if we want to meet the 1.5 degree goals from the Paris climate change, nuclear power is a very important role to play. And it could grow by 4-fold by 2050 to meet those needs. That's a huge increase in the number of reactors around the world and, of course, the demand for uranium. At the same time, in the here and now, what we're seeing is country after country either announcing extensions of existing reactors, and I think people would have heard about Germany and Japan for sure, but also new build reactors, whether it's in South Korea and France, where they're talking about nuclear continuing to play a big role in their power mix. So how does this all impact uranium? You talk about the spot market. And one of the things that's been overhanging the spot market for uranium for the last 10 years has been mobile inventories above ground. And a big report came out right before the conference, of course, coincidentally timed. And the headline was, the days of overhanging mobile uranium are over. So that material has been largely depleted over the last 10 years, whether it's through utility buying or even these financial players. We're all familiar with the Sprott Physical Trust and how much material they've soaked up over the last couple of years. But that is a big red flag and a warning for utilities, I think, to say the days of getting spot material to fill your long-term requirements are over. You're going to have to start contracting again with producers, and you're going to have to pay higher prices if you want to secure those contracts.
Yeah, but I can imagine those higher prices are not at $60 or $70. They must be much higher because we need a lot of new production. And for that, I mean, it sounds more to me like the $90, $100 are in the longer term view here.
Yeah, look, I think we need to get into that $60, $70 range just to get a few new contracts started and get people feeling a little bit better. But ultimately, and as you point out, the amount of new production that we need and the incentive price that's going to have to come in those long-term contracts to get that production going is significantly higher. And I mean, you and I have talked about this before, but more increasingly, I believe that the old highs will get taken out in this cycle in order to incentivize that exploration, development, and production that we need to fit future requirements.
I would say that's a great outlook.
Especially the other thing that I would say that's kind of off the radar, we talk about reactors, we talk about a 4-fold growth in reactors, and that's very exciting on its own. But there's a number of new uses for nuclear and new applications that were talked about quite a lot during the conference, whether it's for producing hydrogen, producing fresh water, other applications, heating applications. Nuclear has a lot of roles to play other than just generating power through nuclear reactors. And then on the reactor side, the small modular reactor, that was a big theme of the conference. And there's a lot of work being done to accelerate development of those reactors, which can be installed in much diverse locations. and they could have a huge impact in terms of the ultimate uranium demand. And that's not built into anybody's models today, really. When we talk about the reactor, all those reactors in those countries that we talked about, those are regular reactors. These small modular reactors are something new, and it could be a structural change in the amount of uranium that's required going forward.
Okay, super. So that means a company who can go in production, let's say early or not in the too far distance, has a big advantage, I would say. And I have the feeling when I look at your press releases and at your company that you are one of those companies, because you have a toll milling agreement with EnergyFuels, right?
Yeah, we really do believe that's the case. And as we've seen in the past, uranium does have spot prices have a tendency to overshoot when they move up, because once they start to really move, the market gets scared, and those prices can go very high very quickly. And so having that ability to turn on production quickly puts you in a much better position than companies that have projects that might take 5-10 years to develop. And those could be very good projects and be very economical over the long term. But we wanted to have the ability to bring production on very soon. So you're talking about our project in the US, and the toll milling agreement, of course, is critically important. You have to be able to turn the rock that you've mined into uranium, and having access to that mill, the White Mesa mill owned by EnergyFuels, which is the only licensed and operable mill in the US, is critically important. But there's other characteristics of those projects that make them that give us the ability to move those back into production very quickly. They were built mines. They were producing in the last bull market. All the capex has been spent. So there's not a lot of additional money that we need to spend on them to move them into production. They're fully permitted. That's another big thing. So you can have access to the mill, but if your mines aren't permitted, we know how hard it is to permit a mine. That's a 3 to 5 year exercise at minimum. These mines are fully permitted. So built mines, fully permitted, access to the mill. I mean, to me, that's the winning combination.
Definitely. And that is then the Tony M mine, Danorus mine, and the Rim uranium and vanadium mine. Are they all permitted? So that means you can, and what means for you short term? Are we talking about 12 months, 24 months that you can start toll milling? Because my feeling is that would be a big key to success and a much, much higher share price for you. Because when you on the one hand can demonstrate, hey, we make money, and on the other hand, you can start to deliver through EnergyFuels toll milling, then you can move extremely well forward with your own, let's say, profits for future exploration development also for Australia.
Absolutely. So all of those mines, those 3 mines that you talked about, are fully permitted. I'd encourage investors to go look on our website. We have our investor presentation, shows all the permits that are in place, but it doesn't mean 12 months to 24 months, Jochen. It means 3 to 6 months. We can move these projects ahead very, very quickly and start producing ore from them, mining ore from them within 3 to 6 months. We're drilling all 3 of those projects right now. In fact, the drill rigs are at Daneros, and we're going to have an update for the market in terms of the results from all 3 of those projects. And then we're making plans. We're looking at contract miners for those projects so that we can hit the ground running next year and dovetail that first production with when EnergyFuels turns that mill back on.
Okay, super. Can you give us already, let's say, an idea? And I know for the regulators that would be a forward-looking statement, but I'm pretty sure you have already an idea when you have contract miners, when you would start toll milling, what might be a margin given the fact that uranium prices might be at Christmas already at $70 or $80?
Yeah, look, so we're still doing the work on getting the costs from. So we have quotes out to those contract miners to tell us exactly what it's going to cost to do that. We do all understand in this industry that inflation is a real thing, and so costs will be higher than it was in the past. But at the prices that you're talking about, I think we could get a $20 margin on production from those projects. Again, with all the caveats that we're still doing the work to get those numbers, and we'll update the market accordingly when we have those numbers firmly in hand.
Okay, so about what amounts of pounds we are talking about of annual production, just to give us an idea? Would it be, let's say, more in the 500,000 pound range? Could it be in the £1 million range?
Yeah, so look, and again, let's just use the historic production as a guide, but if all 3 of those projects were firing on at the same time, and we'll stage them, of course, one at a time, but you're looking at somewhere between 750 and 1.25 million pounds of uranium with all 3 projects running at the same time.
Okay, great. Yeah, and the higher the uranium prices, the higher is the profit impact.
Exactly.
Okay, super. Well, but that's great. So you could already go really in production next year. That would be fantastic. I see. Great. On 6th September, you had a news release that you have acquired 3 additional uranium, vanadium, and rare earth projects in Queensland in Australia. So that is your second column in the company, I would call it. Maybe you can give us an idea of what you have acquired, and now also with rare earths. That's also interesting because those are all critical minerals, right?
Yeah, no, exactly. And so now in Queensland, we've got a critical mass of projects, and importantly, the projects are all located in close proximity to one another. We really have a strategy there, ultimately, where we think we're going to have a central processing facility being fed by multiple different projects. The uranium projects are, some of them have some very interesting historic results, higher grade by global standards, good widths, again, in the exploration category, but we think there's tremendous potential in those projects. You talk about the critical elements, whether it's vanadium, which we see quite often with uranium around the world, and we have other projects, particularly in the US and in Argentina, that have vanadium. They come together. Vanadium is very interesting, both from its steel hardening properties, but then these new batteries, these vanadium redox flow batteries for long-term grid storage, that's starting to make a lot of waves. And so we think vanadium could be a very interesting byproduct. The rare earths is something a bit different for us, and we're starting to look at that a little bit more closely. Of course, it's very exciting, particularly in Australia. We've seen a lot of interesting developments in the rare earth space. Where we think it really adds to our story is rare earths is a strategic commodity, and Australia has put a lot of focus on developing projects. So where uranium sometimes gets a bit of a bad rap, and in certain jurisdictions, they have policies against uranium mining. They're very much in favor of rare earth development because rare earths, we need rare earth supply outside of China. And so it could be one of those things where it helps facilitate the development of our uranium projects because we have the rare earth component to it. And so we're excited to continue to evaluate those projects and see what the ultimate potential is.
Okay. Do you have already historical data about metallurgy for the rare earths? Because to my understanding, rare earths is always nice to have, but if the metallurgy is not working, it's total nightmare to extract.
Yeah, so we don't have that yet. It's still at the early stage of evaluation where we have the mineral. We know the minerals are there. We just haven't done that work. Of course, our partner in EnergyFuels is getting very big into the rare earth business in the monazite sands. And certainly, ultimately, I think we could leverage their expertise as we move these projects further along.
Okay. Then I saw in the terms of the sale and purchase agreement, I saw that you have to do a payment of $500,000 in cash or common stocks of CUR when the UXC LLC uranium price exceeds $60 per pound. That might be next week.
Well, and so that's been a common theme of a lot of our agreements dating back from 2020 when we first started the company, and the price of uranium was at $22, and we said we'll make payments when the price hits 50, 75, and 100, and so when we first negotiated the terms of that deal, that was a little while ago, and so I agree with you. I think we'll be paying making that payment sooner than later. But it's a Hollywood problem, as they say. As uranium prices go up, and we do have to make some incremental payments, we think the value of those assets will have improved dramatically above what those payments ultimately become.
Okay, super. So strategy-wise, is the focus now more, let's say, to get sooner than later in production and then do exploration, or do you treat the US and Australia as two separate, let's call it not entities, but as two separate countries and two separate columns of the company?
Yeah, look, I think you're right. I think it's the production assets first, and it's about being ready to make a production decision when the market prices move to where we need them to be, which I agree with you, I think will be sooner than later. And then evaluating the exploration potential in Australia, but also in Argentina. I think that'll be more of a game plan for next year. I think the other parts of the story which investors should pay attention to is we're not done on the M&A front. We certainly see there's more consolidation in this space that will be coming. I think we're going to be a big part of it. We have a full pipeline of opportunities. and we've been very busy over the last 2.5 years. We expect to continue to be very busy. We want to build a multi-billion-dollar company with production assets and big development assets in the safer jurisdictions around the world. And that's another key which came out of the World Nuclear Association conference last week is the utility buyers want more diversified supply in the better jurisdictions. So with us being in Australia, Canada, the US, and Argentina, we think we fit that bill tremendously. And we want to fill in our pipelines in those countries.
Okay, super. Immediate work you want to achieve or you have achieved already, but what's the outlook for the end of the year?
Look, I think it's going to be the results from the U.S. drill programs. Mm-hmm. We're going to have an updated 43-101 on the Tony M project, and we're going to be ready to make a production decision by the end of the year or early next year. I think you'll probably see us continue to do some more M&A between now and the end of the year. And then it'll be setting up what we think will be a big next year in turning on the mines in the U.S. and becoming a bit more aggressive on the exploration front in our other projects.
Mm-hmm. Okay, super. Last question: what is cash in the bank? Are you safe?
So, yeah, we're very safe. We've got about $24 million in cash in the bank, so we've got a lot of runway. In fact, with that cash in hand, we can bring all three of those mines back into production and still have a lot of money left. We're always going to be judicious with our funds, but where we see opportunities, particularly on the M&A front, it's nice to have that war chest to go out and pursue those opportunities.
Definitely. Super. Phil, thank you very much for the update. That looks all fantastic, I would say. And honestly, I'm a happy shareholder. Yeah, also, I have to disclose that, of course. I'm a shareholder of the company and will stay because I see it the same way. Uranium will skyrocket and hopefully your company too. And our viewers should definitely check you out.
Excellent. Great talking to you.
Thank you very much, Phil. All the best. Yeah, ladies and gentlemen, that was Phil Williams, the CEO of Consolidated Uranium. And you heard it. The sky shines bright for uranium and I think even brighter for Consolidated Uranium. The guys are doing the right things. US and Australia are the big solid columns. This company is standing on $24 million in the bank. And very important is to me, they have the money to bring all three US mines into production via the toll milling agreement with EnergyFuels. And that is fantastic because once they are in production, hopefully next year already then, and uranium prices will go $60, $70, $80, I'm pretty sure they make a lot of money and that de-risks the company completely. They make profits and they can develop Australia. And also all the properties will be much, much more worth. So from that perspective, we think the stock is still too cheap. And the uranium boom just has started. Make sure you are boarding the train. Thanks for watching us and bye-bye from Switzerland.